Hello everyone, I'm Tonjiro Caroline, and in this video, I'm going to make a short presentation about my term paper. My topic is on institutional investor heterogeneity and stock return predictability, evidence from investor domicile and investment horizon. In this paper, I jointly examined two institutional investor characteristics to categorize institutional investors according to these characteristics and examine their ability to predict future stock returns. Jointly examining these two institutional investor characteristics, I came up with 4 institutional investor subgroups, which is short-term domestic, short-term foreign, long-term domestic, and long-term foreign institutional investors. And examining how these 4 institutional investor subgroups are in position to predict future stock returns. The findings shows that only short-term domestic institutional investors are in position to predict future stock returns. So thus, my paper suggests that it is only short-term domestic investors that can be seen as a relative approximation of informed trading. I started by looking at past literature that has investigated these institutional investor characteristics in isolation. Some literature on investment horizon documents that short-term institutional investors are more informed in their trading, and literature on institutions domicile is also mixed, whereby some literature show that local institutions are more informed in their trading, while other literature show that foreign institutions are more informed in their trading. So to harmonize the mixed findings of these two institutional investor characteristics, I jointly examined these institutional investor characteristics, noting that investment horizon and investor domicile has been looked at in isolation in the previous literature, and also realizing that most of the literature has documented that short-term investors are more informed in their trading. I note that these short-term institutional investors can be a combination of both domestic and foreign institutional investors. So I further categorize institutional investors using both the investment horizon and domicile to further examine the heterogeneity that is associated with these institutional investor subcategories. I follow Kim and others who jointly analyzes investment horizon and portfolio concentration. My research questions that are answered in this term paper is what influences the buying and selling behavior of institutional investors with a similar investment horizon but differing in their domicile, and whether some groups of institutional investors are more informed than others. To answer these questions, I use data from different sources. To get data on institutional investors, I got it from Thomson Reuters. Then for firm characteristics data, it is from CrossIP and CompaStat. To construct my main variables of interest, I followed Yang and Zeng to categorize institutions as either short-term or long-term. Then to categorize institutions as either domestic or foreign, I followed Ferreira and others, which gave me 4 institutional investor subgroups, which is short-term domestic, short-term foreign, long-term domestic, and long-term foreign. And using these 4 institutional investor subcategories, I was in position to compute their stock ownership, which are used as the main variables of interest in this paper. So looking at the summary statistics, my main interest being on these 4 institutional investor subcategories, I realized that domestic investors, both short-term and long-term, holds the biggest proportion on the market. And these results confirm with Ferreira and Matos results, who show that around the world, around the world, foreign institutional investors occupies the biggest proportion apart from US. So the fact that I'm focusing on the US market, so these results are consistent with what has been documented in Ferrara and others, who show that the US market is largely domestic, is largely dominated by domestic institutional investors. Then looking at the correlation matrix, we can see that different institutional investor subcategories correlate differently with firm characteristics. And my main interest was on current return and momentum return. And looking at my results, I see that these institutional investor categories and their change do correlate differently. My main results in this table 3 answers my first research question, which was looking at the buying and selling behavior of different institutional investor subcategories. And panel A examines the selling and buying behavior of short-term domestic and short-term foreign. And looking at the results, column 1 and 4, column 1 and 4 presents results on change in short-term domestic and change in long-term foreign, while column 2 and 5 present results on the buying patterns of short-term domestic and short-term foreign. And column 3 and 6 presents results on the selling patterns of short-term domestic and short-term foreign. And looking at the coefficients of return and momentum, the short-term domestic by when the returns and momentum are positive and significant, while for short-term foreign, the return is insignificant. Then when it comes to the selling, domestic short-term, they sell when the returns are negative and significant, while for short-term foreign is insignificant. So these results further confirms the heterogeneity between institutional investors sharing investment horizon, but differing in their domicile. Then looking at panel B examines the buying and selling patterns of long-term domestic and foreign institutional investors. And I follow the same procedure like in panel A, and looking at the buying and selling patterns of these institutional investors. It also differs, further confirming that institutional investors with similar investment horizon but differing in their domicile do behave differently in their trading. And looking at table 4, table 4 further examines these different institutional investor subcategories and their ability to predict future stock returns. In this table, I regress 1 quarter ahead excess return on the changes in institutional investor subgroups, and short-term change in short-term coefficient is positive and significant, and change in short-term domestic coefficient is also positive and significant, while other coefficients for other subcategories are insignificant. So this result shows that it's only short-term domestic institutional investors that are in position to predict future stock returns. Thus, this category can be proxied as an informed group. Then, in conclusion, looking at the discussion and conclusion of this paper finds that short-term domestic institutional investors is the only group that can predict future stock returns, and the coefficient is positive at 5%. So these results confirm that what has been documented in the previous literature, that short-term institutional investors are more informed in their trading, can only be accounted for by short-term domestic institutional investors. Thus, this paper contributes to the previous literature that has looked at institutional investor heterogeneity, whereby in this paper, I jointly examined investment horizon and investor domicile, and provide further understanding in terms of how institutional investors with similar investment horizon but differing in their domicile do trade differently, also do have different abilities in terms of predicting future stock returns. Thus, this paper has an important implication on the stock returns, and asset pricing, whereby it highlights more into heterogeneity that is associated with different institutional investor groups, thus further providing more evidence that in designing different strategies that caters for different investors, such heterogeneity need to be considered. Overall, this paper documents how institutional investor heterogeneity influence stock return predictability by jointly analyzing investment horizon and investor domicile. So basically, this is what I was in position to look at in my term paper. I thank you.